2024 is coming to a close. Big winners, big losers, and pretty good volatility. We'll review some of those stocks and we'll look towards 2025 and we'll try and figure out today's action, which right now seems pretty choppy. Our last guest of the year, Jonathan Corpina from Meridian Equity Partners. He'll give us a view from the floor, what the institutional investors are looking at for 2025, folks. This is your final pre-market prep of the year. Let's have fun.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Let's get the S&Ps up here and take a look at the overnight action. It's been a little bit of a two-way. We had that week close. We went down, got nowhere near Friday's low or Thursday's low. And wait, what's today? Today's Tuesday. Nowhere near Monday's low, nowhere near Monday's high. Looking for an inside day. The buck flat 107.90 TLT showing some life here, up 58 cents, 88.38. USO clear 74, but flat on the day. Can't get to 75. Traded 74.89. Your gold and silver ETFs, they're flat here. GLD 240.66, SLV 26.37. It's kind of setting up on here on the daily. And Bitcoin stuck here right in the mid 95,000 handle. It's up $330 at 95,285. Let's bring on Triple D and
Reliance
sports.
up. Year in review starts with Lions. The year in review starts with Lions. Another big victory here. I don't know how to handle it. All my teams are actually pretty decent. This is never normal here. I mean, as a Lions fan, we're only used to losing, so we're always ready for the rug pull, and maybe that's going to happen in the playoffs. But, I mean, we fought through injuries, Joel. We fought through adversity. And here we are looking at the Lions as one of the Super Bowl favorites.
Yeah,
Never
they are.
would think.
Yeah.
14 and 2.
I'll tell you, you know what a huge football fan I am. You know how Michigan centric, I've been for, my entire life. And I've had interest in pro over the years. The Lions ebbs and flowed. I never poured my heart out for the Lions because I could have put Lisa through the same thing on Sunday that I did on Saturday. But I'll just say that Ben Johnson, that offensive coordinator, it has to be one of the best I've ever seen. Just the creativity, the plays, the way these guys are open. I'll follow him wherever he goes. I'm going to be a big fan of him. And I think, of course, Dan Campbell's done it, but Dan Campbell, we'll see. But
Gambling Dan. He's more conservative this year, though. He's not like he was last year, always going for it. He's a little more conservative this year, and it's going to be interesting when we get to the playoffs if he's going to turn back into Gambling Dan or not. But he's a little bit more conservative. Big victory here last night. Go Lions. 2024. We don't want to start so much sports, though, because once we go over 2 minutes of sports talk, a lot of people in the chat.
No sports.
They're here not for sports. They're here for stocks. It's not stocks and jocks. It's stocks and stocks. So here we are. Year in review. The number one stock in the S&P is on your screen right now. Palantir, PLTR, was up. What is it? Actually, just going to grab it. I think it was up over 300%. Huge winner this year. If we're just going to the actual numbers, from my friend David Prince, he says it was up 349%. Palantir, PLTR. What a year. It was one of our picks. I screwed this one right up because I talked about it when it was $7 or $8. I said AI is all over their site. This was when Nvidia started blasting off. I talked about Palantir being a good one. I was along it, and I got shaken out. And then you look back and you're like, wow, did I ever screw that one up? But Palantir, from start of the year right around $15, $16. Finishing the year, we don't know finish. We have one more day, but we're $77 here right now. It's been a fantastic year for the LTR.
And what do you do now? What do you do now? What do you do now with your Palantir?
I would sell it, but I mean, again, I get it. AI is not going away. Is there a story here continuing? Probably. Do I think we get a January pullback and some profit taking? I do in the name. Hasn't happened yet, but also 2025 hasn't happened yet. So anybody selling today has to pay the tax bill right away. You wait till you sell on Thursday, you have to pay the tax bill for another year. So I think you will see a little bit of profit taking. Does that mean the story is over? Does that mean it goes right back down? No. This story is still, AI is not going away. And if you look at the winners, the big winners have definitely something in common. Majority of these stocks are all AI related, at least the top three. Because number one, Palantir. Number two, again, David Prince posting this. Thank you, David. Vistra Technologies, VST. This is an AI play as well. It's the energy. It was up 263% this year. Energy stock just blasting off. Started the year around $40, ends up at $140. This is after multiple years of really consolidating, doing nothing. If we go back 6 years ago, it was 18. So basically 6 years, the stock went up. And again, there's a little dividend there, but very small. It's only 0.62% now. Back then it was about 2% though. 6 years, stocks up, basically doubled in 6 years. Now bang, bang, triples in a year. Big move. Do you book the profits and run on this one? Do I think there's some profit taking to be had? Yeah, but is the AI story over? No. So it's tricky. It's tricky to just come in. I do think some of these stocks are going to have some profit taking in January. So as a trader, I don't think I'm buying them here on December 31st. Do I think there's an opportunity, to maybe buy them mid-January if they get a pullback? Maybe, because I don't think the AI story is over.
All right, before you move on to the next one, I want to try and just do some quick technicals and comparisons here. The Palantir, I mean, I don't know where to figure out a retracement from because, it's pulled back. Is it going to make a lower low today? But if you're Palantir, if you're up these outrageous percentages, Mr. DeSoto 1 is up 617% in it. Darwin is up 842%. I would just keep an eye on the old time closing high price, 82.38. And it's traded close to 85. There's a double close at that area at the 82. So I'll just keep an eye on that. It's $5 away. Longer it takes to improve on that old time closing high, I'd be a little bit more leery of it. Now, the Vistra is giving you a warning candle here on the month.
Warning candles.
Yeah. Look at this monthly candle.
And if you go out just to the dailies, you can see the head and shoulder pattern here too. So again, not that I'm a big pattern trader, but that head and shoulder stands right out. Left shoulder, November around 140. Head up here at 160. Right shoulder has now officially formed at 140. Look at that top right chart. If I've ever seen, if I saw that chart, I'd go be getting some head and shoulders dandruff shampoo here because the stock looks like it's got dandruff.
Right. And then so watch the monthly candle, watch the monthly close. I can give you some levels though on this one. I mean, right here, right now, must hold at 132, 133. Boom. And then on the upside, you can tell the sellers are just stacking here. You had a quad highs at 148.5. They said, well, I want to get out a little bit lower. And they came down to 144.50. And just talking about levels, do you remember the level I gave yesterday in Tesla?
No.
For support?
No, I don't.
Does the chat remember?
No.
Or do you guys
just your level?
Are you guys just a bunch of bots and you don't remember the levels? Carmen will remember. Or
it's got to be that low 415 though.
Okay. Yep.
After hours, though, Tesla took it out.
Oh, I did save it. I had multiple. Yeah, it did get hit after hours, but then
I was down like 412.
Oh,
and then they just decided, oh my gosh, we got to buy Tesla into the end of the year. Now remember, folks, this day a lot of times you do see continued momentum. So as much as we can say, oh, we see Vistra the head and shoulders, I'm not shorting. If I do short, it's going to be at the end of the day, not at the beginning of the day, because Winners tend to win on the last day of the year because you have window dressing, portfolio managers saying, oh my gosh, I got to put Nvidia in my long-term portfolio or in my portfolio so that all the people who get my statements know that I own Nvidia. It's probably not a coincidence Nvidia had a good day yesterday. So just remember that. Don't get ahead of the January effect. It's never a good idea to trade it way ahead. I know it would have worked 2 days ago. It would have worked. Obviously, we're bouncing here now, but I'm hoping for a nice bounce here today. And then the setup would be a little cleaner. So, and that brings us to number 3 in the S&P 500, which was indeed Nvidia, which was up 177%. And I'll say I took the majority of this move. So I did this one very well. It was the N in my Nassau trade that I came out with on January the 7th. You know, I bought it at 400. I bought it at 500. I bought it at 600, which is 40, 50, and 60. And I started unloading slowly in the 90, 120. And I think I sold the last bit right around in here, 135, 130. Not the last bit, but I still have a small piece. But I probably have a piece that I'm probably never going to sell. Totally playing with the house's money at this point in time on Nvidia. Do I think Nvidia is going to have a good year in 2025? I think it's going to have a cooling period. I think it's going to come early. And then the AI story is not over, though. So it's hard to say.
No.
You know, yesterday when I was talking, I think AMD can come in and potentially start to like figure it out and start to challenge. And not that they're ever going to be, you know, number one, but maybe they could take a little bit of market share here. I think there's the potential to do that. That's why, you know, I like AMD going into 2025, but I liked AMD in 2024 and I was wrong. I was right for the first half. It really, my Nassau acronym, Joel, really blasted off. I had AMD, it was around $140, and within 3 months, it was 200 and, what did it get up to? 227. It was up huge. But the last half of the year, just like with SMCI, really took it, you know, down, and AMD actually ended up closing down on the year. It was a tricky year in the chips. It was a tricky year in the semis. Some of them up, some of them down, some of them kind of scratch. It was definitely a stock picker's market overall, but especially even in the semis.
AMD, man, you're almost talking me into this thing. I mean, holy mackerel.
Well, she's your friend. I guess they've confirmed.
We're not
going to
talk about that anymore. We're not going to talk
I'm
about that
not
anymore.
going to talk about that anymore.
I just want to say someone did tweet out that that she couldn't have worked on the floor in the 70s because she went to school or in the early 80s, and this was in the late
Too
90s.
young.
It was the late 80s and early 90s, and I'm 100% sure that it was her. I don't know how we're ever.
Okay, we can't talk about it ever again. You're looking silly now. Okay. So we're at AMD. I bought a little bit more yesterday. Just, you know, again, I'm at a full size position, I would say, on it now. I like those 25, 26 times earnings, and I like Lisa Su. So when I'm doing long-term investing, it's way different than trading. It's not on for a trade, you know, because obviously the stock's in a downtrend, it's hard. But I'm always trying to buy good companies at reasonable valuation and management that I believe in. You know, like obviously Jensen Huang, you think about Elon Musk, you think about, you know, obviously, you know, just all the great CEOs that we've had. Lisa Su, still to be determined, but I believe in Lisa Su. So you find companies, good companies, reasonable valuations that you believe in. And is the AI story going away in 2025? No. Can AMD be a big part of it? Absolutely can if Lisa Su can figure it out. I think they do. That's why I think AMD, I think it has a good year in 2025. So it's going to be one of my picks again for 2025, even though it wasn't a great one in 2024.
Okay, where did we keep going? Oh,
yeah, number 4. Nobody's going to guess number 4.
Yeah, let the chat.
They may know. What's number 4? Chat, what do you think number 4? So we had 3 AI stocks that led the charge, and yes, this is S&P. So don't go outside the S&P. S&P 500. Palantir number 1, Vista number 2, Nvidia number 3. What do you think number 4 was? David Prince tweeted out just a little while ago, 30 minutes ago, so you might know if you follow David. But number 4, what could it be? It's not an AI stock. It's not a stock that I would have even thought was, you know, number 4. And we're talking about the best performers of 2024. It's not a stock that I would have thought of. MSTR is not in the S&P 500, so it's not MSTR. MSTR was up, I think, 500% at one point in time, but it's not MSTR, not in the S&P 500. Jeff Bezos. Look at that. We got Jeff Bezos in the chat. Jeff, correct. UAL. UAL is Beer Guy got it too. UAL, it is. Unbelievable. Not a stock that I would have thought would be number 4 out of the 500 stocks, but it was a turnaround in a lot of the airlines, not all of the airlines. We know LUV really didn't participate whatsoever. AAL really didn't participate much. DAL was a good one. Nothing like UAL, up 138%. From the COVID piss to market bliss, it's an all-time high for UAL, company doing everything right in the airlines.
You know what term that Frank Holmes used, and I'm definitely going to be using it again when he talked
You
about
said something cool, I forget.
digital nomads.
Digital nomads.
Yeah.
What do you mean by that?
That means that, young programmers, okay, all they need is their computer, right? He mentioned there's some place, I don't know, in the south, in the islands that they can go to, and they all hang out, they all program, and they're like, oh, I want to go somewhere else. And they still can work, and they hop on a flight and they go somewhere else. They go to Paris and they work in Paris for a little bit, and then boom, it's they're digital nomads. So I like that term, UAL. Boy,
Sure.
it's hanging out here. I mean, you need more than that. I think business travels come back a little bit, right? I just am looking at this and I'm saying if I own this long term, I'm like, as long as it holds 90, I'm happy. And if it can break out over 100 triple digits, off to the races it goes. But it's been trading for the most part since late November between 90 and 100. So trade, it's in a trading range, kind of near the top of the trading range. So wait for a breakout or a breakdown between 90 and 100. And we have DAL. We got earnings coming in, right? So, of course, wait for the earnings reports. DAL, I mean, I've just had nothing
Was one of
but
the better
great.
ones. It's
Yeah,
come back a
yep.
long ways too. Did it make a new all-time high? I think it did.
Yeah, it did.
I
It
think it
did.
did. Yeah.
Yep.
Are the airlines, what do you think in the airlines overall? Let's just go sector for 2025. It's a tough call because, obviously, interest rates really haven't affected the US consumer like they have others. People are still doing stuff. People are still traveling. People, don't seem to be curtailing their spending really whatsoever. And if interest rates drop a little bit, maybe that spending goes up. It's hard to be bearish them. But at the same time, I don't know if it's going to be my picks for 2025. I mean, UAL up 140
Yeah.
or
Man.
138%. Hard to think of it tacking on another 138%. So I think, I'm probably not a fan of UAL. Not going to be one of my picks for 2020. Maybe it performs okay. But I don't think you're getting this huge outperformance from UAL again. Just guessing. It's all a guess. Everything is guess. So number 5, I don't know what Mitch is showing up here. Hey, Money
Yeah.
Man.
Yeah.
Number
I didn't mean to
5.
show that. I meant to delete that comment
Oh,
because
we're
we don't
just
need
almost
those.
trying to
Yeah.
delete comments here.
And,
Okay, no
yeah.
swearing. We're all going to be nice in the chat. We have a couple people fighting in the chat. No fighting in the chat. No fighting in the chat. Let's be nice. Everybody be nice. Number 5 was Axon Enterprise. AXON, up 133%. And this stock has been an outperformer for a number of years here, really since 2022, bottomed at $83. Had a pretty good 2022, a pretty awesome 2023 actually was up to, and now tax on just a huge 2024. Stock was up 133%, opening the year around 300, closing around over $600. So huge move. The old taser still
Taser.
going. Axon, AXON, been an outperformer for a long time.
This $600 area, I don't know about it going back all-time high, but you had to gap up after earnings, and then this is a critical level. And how well, on the monthly or the dailies and these big stocks. I mean, the eyeball this here. If you're sitting on profits and you think it's going to 1 million, boom.
They all going to 1 million, to the moon.
590. I'd say I'd hold on to. I wouldn't want to get involved in this. If you're buying it here at 604, it breaks 590. I mean, where's it going? It goes into this candle. And then also what I would say is you want a retracement of this move here. You've had a 100-point down move. basically 100-point down move, man. You want to get this thing back to 650, keeps making lower highs. Oh boy, I don't know. I don't like
None of these
this
stocks
one.
are going to be my pick
Oh
for
yeah,
2025, but I'm going to. So none of these stocks I'm even really interested in buying today for the simple reason, even though I still own Nvidia. The January effect is more sell the leaders, buy the laggards. This is my
correct.
January effect: buy the laggards, sell the leaders. That's usually what you often see in the first week is a reversal of trends. So these are stocks that could actually show a little bit of relative weakness or weakness, flat out weakness in early January. That's my prediction. I could be wrong. I don't have a crystal ball. Tesla deliveries are going to really impact, this trade because they come out on January the 2nd, and that's going to move obviously a lot of momentum stocks. But let's talk about the losers. We started to tease it yesterday, but then we didn't fully get to it here. If we go to the losers, the number one loser of the year was indeed, I think it might have been the number one loser of the previous year, Walgreens Boots, the dog of all dogs. WBA was down a cool 63% in 2024. The year before was probably down. The year before was probably down. The year before might have even been down too. This is the dog of all dogs, one of the worst run companies out there. If you putting
Why do
this
you
in
say
long-term
that, Dennis?
portfolio, I think you're
Why do
doing
you
it
say that?
wrong.
Why do you say it's one of the worst run companies?
Because the stocks went from $80 to $9.
Well,
So
they're very
I
nice
also
to
go
me
into these
there.
Walgreens Boots, and everything's expensive in there. So when I was down in Florida, I went to the Walgreens a couple of times there, and I'm like, the stuff in Walgreens is more expensive than it is in Canada, and Canada's currency is,
Oh,
30% weaker.
yeah.
I'm like, how am I paying these prices? And then somebody else told me that, yeah, nobody shops at Walgreens. It's too expensive. So I don't know. I guess it's a convenience factor because it's close, they're on the corners and stuff. But from my understanding, stuff is very, like, not in my understanding, from my eyeball test, stuff is very expensive in there compared to like Walmart and stuff. So maybe it's hard to run, these stores, they're everywhere, they're on the corners, but prices expensive at Walgreens. Live, Love, Sale agrees. Travis says that's just Florida, but that's all I have my experiences in Florida as well, but expensive. So stock goes from $80 to $9. So after saying all these terrible things about this stock, I'm going to tell you, I'm interested in buying this at the close tonight. Why? For the simple reason of the January effect. Sometimes the biggest losers become not buying it at the open because we have tax loss selling potentially coming into this, much like it did yesterday. You had some tax loss selling in the stock went from 950 to 926. Could see some follow through tax loss selling. But at the end of the day, the tax loss selling ends. At the end of the day, at the end of the trading day, you start a new year. So I think Walgreens Boots sets up okay for a 1 or 2 week, maybe even a few day rally in January. Early January, I think you could get a relief rally. Tax loss selling is gone. This is my play for just a day, just trading, not investing. Will not touch, not in the long-term account, but just from a trading perspective, maybe get a little early turnaround. So this is my list for the January turnaround effect. Again, I don't know if it lasts. I don't think it lasts, but I think you could get an early pop. Don't get stuck. These are bags. These are dogs of dogs. But sometimes early January, the dogs bark for a week or so. So that's, from a trading perspective, I'm going to be looking for a little bit of life. Show me a little bit of life January 2nd. Maybe that's when I'm not going to have the guts to go in and buy it December 31. But show me a little bit of life early. Maybe I get interested in a trade in WBA. Number 2, Moderna, mRNA. Horrible.
Wow.
Talked about it.
Oh.
Vaccines, one trick pony, COVID vaccines, not a lot of people getting them anymore. It's down 60%. It's went from everything to nothing. $500 to $39. They're trying to figure it out. They're trying to do other vaccines, but people are just turned off of vaccines altogether right now. So it's tough when you're a vaccine company. $39. Do I think there's a potential for a January effect here? I do. So another one that I potentially show me a little bit of life. Maybe you want to wait until you actually start to see a little bit of life before just striking into, the abyss, which is kind of what you're doing here on these stocks right now. I'll keep going here, Joel, unless you've got comments on the technicals. Number 3 is a stock that me and you both own, and it was horrible, Intel. Down 60% for the year. I take it back. Walgreens, not the worst run company. Intel, absolutely the worst run company. This was a company that was positioned as the best chip stock back in 2000, before AI, 20 years before AI was even dreamt of. And they've just lost their way, done everything they possibly could do wrong, and was down another 60%. Is there a turnaround story here? Maybe, but man, it's been ugly. Do I think it could have an okay early January? Yeah, from January effect, if January effect happens, and we don't have a crystal ball, it doesn't have to happen, but a lot of times leaders lag and laggards lead in the first week of January. These are your ultimate laggards, folks. So Intel, what are your thoughts, Intel? We'll stop there.
I don't know. I don't know. I mean, it's tempting just to like quad triple down and hope for a pop to any kind of reasonable level here, but boy, oh boy, I mean, there's good support here, 1852. I mean, so you're a buck 50 away, but I mean, you're just trying to pick a bottom here. Maybe try and buy it on strength, like a little bit shorter term. Maybe if it gets above and holds a bit above 20 and a half. But I tell you, the AMD looks like a lot more enticing than the Intel here. But what else in that? The
Number 4 is a stock that I don't trade often, Celanese CE. It's had a horrible year, down 56%. The chart again, all of these stock charts are obviously going to be very ugly here. These were the worst performing stocks in the S&P 500. Number 4, CE, and then number 5, Estee Slaughter, which we call, and it lived up to its name once again here. Just a company that's done everything wrong. 2 years ago it was $250. It's 74 bucks. I don't know. There's obviously, you could say makeup, isn't happening here, but I think it's more of just, a company losing its way, because Alta's been fine. Alta's actually been pretty decent. Maybe not in 2024, was down slightly, but overall, compared to Estee Slaughter, Alta's been unbelievable. So $350 back in 2022 is now 74 bucks. Is there the potential for January effect here? Yeah, keep an eye on all these stocks. So group these stocks. If you start seeing life in a few of them there, then you start thinking, ooh, maybe we do have a potential for a couple days, of life here. I don't know if it's going to be much more than that, though. Like, I don't think it's like all of a sudden, the dogs of the Dow, we're going to be coming in and these are going to be the best stocks in 2025. I think these could be decent stocks in the first couple of weeks, but I don't know if it's got much more than that, because these companies, especially, some of them that we mentioned, are very poorly run. Just finishing off the list, the top 10, if you want. Dollar Tree, ENPH, we know Enphase has just been punished by obviously higher rates. Dollar General, so the $2 stores, and rates in fact impacting all of these. Humana, and then CVS. Those are your top 10 worst performers of 2024. Applause for these stocks? No, we'll hold the applause. Again, this is the list for me for January effect. Maybe there's a turn.
Wow, and CVS, I mean, they had the activists in there too. Remember the activist pump? The thing popped here when it popped to like 65,
Been a sell.
66.
Every pop's been a sell. As bad as
Yeah,
Walgreens has been, CVS hasn't been much better. I mean, they're everywhere too. There's got to be like a problem that there's just so many of these damn stores, and really differentiating. Does CVS feel different than Walgreens? I mean, obviously the stock performances both been terrible, but we know the way Rite Aid went. Is it a problem that people are just going to Walmart and just getting all this stuff at Walmart and Costco? Now Costco's pharmacies too. I mean, I think Walmart, Costco,
yeah.
and even Amazon just eating their lunch. Never go head to head with Walmart, Costco, and Amazon. And that's really what you're doing when you're buying these stocks. So is there potential for a turnaround in early January? Yeah. Does it last? I doubt it. So, I mean, don't get caught holding the bag on these things. We don't get a pop, that's not good news either. And sometimes, we may not get a pop. Maybe we don't. Maybe we just continue the way we were going. But, overall, often laggards lead and leaders lag in early January. So there's potential for a trade here, but that would be it. Just be careful, though, because when stocks start making new lows, you got to go. And a lot of these stocks are near lows.
How about you want to hear one of my Joel crazy ideas?
Yes, please.
How about they merge
Maybe
and they
merger out of necessity.
and they close thousands of stores?
That would probably help.
Yeah,
Probably would help.
yeah. Yeah.
The one thing helping CVS more is the Medicare. Like they obviously, the acquisition of Aetna. That probably helps. But then, you look at the worst performance of Humana's right at the top of the list too, and Humana Aetna. I mean, it just hasn't been a good year for healthcare. A lot of these stocks, Moderna, Celanese, going through, Humana, CVS. I
Pfizer.
mean, it hasn't been a great year for healthcare. Go up the XLV. We could just pick
Yeah.
on the XLV a little bit. It's not been a great year, Joel. XLV, usually steady as she goes. I think it ended up down on the year. It's not been a great year.
What about IBB?
Not been a great year for biotech either. Again, I think rates come into play here to a certain extent, but I don't know. It's definitely rates like that has held a lot of sectors down. And if we start getting, rates going actually lower, some of these sectors do turn around. So I'm going to say TLT an indicator probably for healthcare. TLT probably an indicator for the healthcare.
What if rates just hold steady? Like
I don't think it's good enough for certain sectors. I mean, the TAN needs lower rates now. We've talked about this, and this is why the relentless selling pressure in these sectors. SEDG, I don't know if it can survive. I mean, we've been saying this since the stock was 40. It's 13. We've been saying that's even since higher than that. As soon as rates started going up, a lot of these stocks were going to be in trouble. And, now you look at Solar Edge, SEDG, which probably impacted the most. 2020 or 2022, when the Fed said, hey, we're going to start raising rates to tackle inflation, the stock was $300. Here we are, 2.5 years later, obviously a lot of rate hikes later, the stock is 13. That's not a coincidence, folks. This is rates at work. Higher rates, when you sell products that are primarily financed heavily, it's difficult to, all of a sudden, when you're calculating out your returns and your internal rate of returns on the projects, they come out a lot lower at higher rates. So financing been a major issue here. If rates were to drop dramatically, some of these stocks maybe turn around, but it doesn't sound like rates are going to drop dramatically. So I think, maybe Solar Edge is a stock that could have a decent January just from the January effect, but it's hard to get married to these positions. I'm going to say I don't want to get married to any of these dogs.
Okay. All right. So we've been bantering top stocks, worst stocks, but we're going to get a view from our guest, Jonathan Corpina, Meridian Equity Partners. He's the last guest of the year, and he's going to recap 2024 for us and look to 2025. All right, there he is.
Good morning.
How you doing, Mr. Corpina?
I am wonderful. Thanks for having me on this last day of the trading year.
Yeah. It's some people are working, some are not. One word to describe investing in 2024. What would that one word be?
Wow. There's so much.
Wow
much
might be the word. Wow.
Wow might be the word. Wow might be the word. I'm sticking with wow. That was the first thing that came to me. If you look at what we were anticipating coming into 2024, right, and the knowns on our calendar, right, the Fed conversations, the elections, and then the unknown of what occurred, geopolitical issues, and different pivots within our economy and within our markets. It really turned out to be a very, very interesting year. Volatility clearly came into play there. We saw a tremendous amount of volatility, massive moves in the VIX during different periods of the year. I recall speaking to you guys back in August when the VIX topped off at 65 on an intraday. We've seen a lot of movement in our markets. What I think we've all kind of learned is that our markets continue to be very fragile, and once they start going in one direction and you start believing in it, it's gonna pivot on you very, very quickly. We're kind of currently seeing that now in the recent market activity that we're all collectively trading around. But it's going to be interesting to see how 2025 plays out. Coming into a new administration, new policies and procedures, new outlook. Geopolitical risks have not diffused. interest rates, as you guys have just talked about, aren't coming back as fast as everybody anticipated. There's plenty of headwinds that's out there, but there's plenty of headwinds that were in 2024. Yet the market seemed resilient to power through and get through some of these known and unknown headlines. So it'll be interesting to see if we can continue this trend, and if we can continue the trend, where's money rotating out of, where's it coming into, how long does it stay within those sectors. So it's going to be an interesting ride as we head into the next year.
So what sectors are you focusing on here, Jonathan? Is it the AI continues here? Do value stocks finally show some life here? Or, you know, where are you looking, you know, for, you know, sector-wise 2025?
Yeah, let's kind of touch on a few of them. The AI trade, I don't think that's diffused as of yet. We still get plenty of legs behind it whenever we get a headline talking about AI. I think we're kind of at the tip of the iceberg of what AI can offer. It seems every month or so we're getting a new product, a new expansion within the AI community, and we're going to continue to see that. How that gets embraced is what is going to have to be determined. But I do still think that AI is going to be an attractive headline for people, and whether that continues to translate within corporate earnings will be interesting. But I think the euphoria will still be there in AI. Real estate has been under pressure. I think we were all expecting interest rates to have I don't know if we all were expecting it, but we were expecting interest rates to obviously get cut. The pendulum swung way too far. It wasn't going to come back as fast as we've seen it before. We haven't seen that translate into real estate just yet. If the Fed continues on their path of cutting rates, hopefully we'll start to see that impact of it. It's taking a lot of time for it to really translate within the real estate sector. We haven't seen it yet. Mortgage rates continue to be extremely high. We're waiting to see how that'll come down. But real estate is one that really hasn't performed well considering the environment or the thought process of rates moving forward. Look at the financials. We've talked about this before. Financials are going to be really interesting. We're heading into 2025. There's two kind of major sectors in the revenue producing financial area that are going to be coming into play. One is syndicate. Syndicate has been very quiet for many years. The syndicate play has kind of taken a back seat, right? Companies have been waiting for IPOs. They're waiting for the right timing of year. They're waiting for the right landscape, the right situation for companies to come public. And it's been kind of put on the shelves for quite some time. I think as we get into 2025, with the market performing as well as it has in 2024, a little bit more complacency in our economy and complacency within our markets, I think we're going to start to see the syndicate market pick up in 2025. The second area is M&A. M&A has been relatively quiet, both from opportunity wise, both from capital cost wise, from a roadblock and monopoly wise. As we head into a new administration here, it's a little bit more pro-business, pro M&A. We're going to start to see more of those companies kind of come back into play. When you couple M&A activity with syndicate activity, that is growth areas for financials, for the big banks, the JP Morgans, the Morgan Stanleys, Wells Fargo's, Goldman Sachs, across the board. We're going to see a lot more activity in there, and that's going to be somewhat of a potential revenue revenue generator for these larger banks, and that leads straight to the bottom line there. So I think financials do have some upward potential that's in front of them if we get the activity that I think we're going to see.
New administration probably helps that too. Obviously, this administration has been very hard antitrust, trying to get deals through seems nearly impossible here. It's probably turned management off of looking for deals. So maybe that does change. Let's go Just sticking with that theme, if we think M&A is going to be a little bit better, what are your thoughts on biotechs? I mean, obviously, XBI, lots of smaller names in there, IBB. I mean, that was, biotechs have obviously had mergers over the years, but we haven't seen a lot the last little while. Thoughts here?
Yeah, we haven't seen a lot, and we've seen that that sector has been kind of clearly lagging behind in what we should have seen from a growth side. I think the way companies grow is two ways. One is capping within themselves and start building out their infrastructure, investing in product, investing in physical structure, investing in people, and the other way to grow is through mergers, and it's probably the quicker and easier barrier to entry to do that. We haven't seen it as strong in the biotech sector. I think, again, as we get towards this pro-business, pro-M&A, money might become a little bit easier and a little bit cheaper to start throwing at some of these capital events. I think we're going to have to start to see that pick up there, because that's where growth is. And again, it's quick barrier to entry to start really raising scale and getting market share. So I think we will start to see that there. It has been lagging behind within that sector.
How about the great debate? Small caps. We talk, we need rates. We need rates. We need lower rates. And look, we're back. You finally made that new all-time high. We did it. We got back to that 2021 level, and then kaplooey, flushed it right back down. I mean, monthly support here, taking a step here. What about small caps? Can they get back up to that area, or is it just going to be the yin and the yang?
Joel, we've had this disconnect in the market, right? And we've been watching the headlines of all-time highs, S&P, and everyone's cheering about that, but getting about that small cap sector that really is encompassing of much of our investing world and our companies that are out there, and it hasn't caught up yet. We did get a glimmer of hope at some points in the third quarter where it really tried to play catch up. We really tried to get into parity and see some sync within our indices, and then, like you said, the rug gets pulled out from under it. I'm not going to feel confident in this market until we have parity, until we have the small caps really playing catch up and getting somewhere close where it should be, comparable to some of the other indices that we follow. It's going to take a lot for it to get there. Getting rates down lower. Again, we haven't seen the effect in the short period of time so far. This would be an effect of that, getting small caps to start playing catch up. Right? We need rates to come lower. We need M&A within that sector. We need easy money lending into that sector so they can continue to build and grow. I think from just a small cap point of view, we have to continue to watch that, because we're going to see our validation in the small caps. We're going to see our aha moment if we can get the small caps to move higher, stay in line with the other indices, and stay within that range. Not just touch there, not just kind of hang out there, to actually be there for a period of time, and that will add some validity to our markets. We're not just seeing it yet. We're not just feeling it yet. It just seems like every time it wakes up, it just kind of loses it out from underneath it very, very quickly.
But what if you're of the theory that I just think rates are they're going to be here. They're going to be here for years. They're going to be right in this area, and with inflation, we got a little whiff on, it's good, it's better, whatever. But, is it paramount for the market overall? I mean, look what happened. Powell came out, very confusing market to end the year. I mean, Powell comes out on Fed Day and said, boom, he pulls the Kool-Aid right off the table, right? Pulls it off, dumps it out, okay, and then 2 days later, Goolsby comes out and says the exact opposite. So the Fed doesn't seem to be in agreement. I think we're just holding steady here. Can the market, does it need that crack of lower rates, IWM, for us to have a good year, match that 20% 2025?
Oh, Jonathan, we lost his audio.
Yeah, we did.
Jonathan, I don't know if you can hear us.
He's not on. He's not on mute.
I think he was staticky a little. I wonder if his like connection.
Yeah.
Jonathan, I don't know if you can hear us.
Um.
Yeah, I want to know what he's saying because it sounds really good too. He's got the enhanced button too.
I know. He might have hit his.
Yeah. Jonathan, we're trying to talk to you, Jonathan. Okay, we're gonna.
We're gonna.
Jonathan, we lost your audio. Let's just see if
let's see if we do it one more time.
Yeah, it's on his end because he's not muted.
Yeah.
So it might be his connection. He was staticky. He was coming in and out a little bit there. It's so difficult here.
Let me remove him.
Yeah.
Try to add him again.
No, it's on his end. It was his connection.
Yeah.
Okay, we're gonna remove Jonathan. We're gonna figure this out. Jonathan, we can't. Okay, so we're gonna bring him back here in a second here. So we lost Jonathan's audio. We'll try to get that worked out here in the background here. But a lot of things Jonathan was saying here, a lot of things he was saying, making good points. I mean, it's a year where interest rates are going to matter here again to a lot of companies. And, you know, we've had these themes. He said, lost audio. Joel's showing him we lost his audio.
We're high tech.
He's still talking in the background.
I know, he is. Do I have his phone number? Oh,
yeah.
man.
This is awesome. He was making such good points here. Missing it all. He's going to have to restate all that here. So, Jonathan, we lost your audio. Can you please check your connection? Please check your connection here. We lost your audio. So
I got to you talk for a minute. You're good.
Yeah, Joel's going to go work in the background with Jonathan, try to get his audio. We'll get him back. Again, this year has been a stock pickers market. This year has been winners, losers. AI obviously was the theme, and certain sectors have lagged. And just to add on to Jonathan's points here, and what point I'm making, and I've been making for a while, I wonder how much the small cap weakness is related to rates. And then I wonder how much it is related to the fact that there's just not that AI story in small caps, where you've got the sexy AI story and money moving from story. Like, obviously, we know story drove 2024. Story probably continues to drive 2025. And you look and you think, what's that small cap sexy story? All these small companies using AI to get better? That's a possibility, but we know that all the mega caps are using AI to get better. So you're just feel safer in those stocks. And how much, like just what we were saying with, CVS, and Walgreens having their lunch eaten by Amazon, Costco, and obviously Walmart. I mean, that is happening to scale in a lot of other, companies. And a lot of these smaller companies are obviously losing market share to the mega caps, in their various businesses here. And I'm not sure AI changes that. It probably accelerates it. So buying small caps to a certain extent almost feels like the anti-AI play. I mean, does it change, if we get this AI, cooling period? Small caps may be left. But again, I think this violent rotation that we saw in December maybe continues. And, you probably don't see real strength. Again, interest rates is a big part of it. But you probably don't see real strength until you actually start to see some weakness in the mega caps. Because why, move into small cap names? Why start an ETF with a bunch of small caps in it when you start with all the sexy AI names? That sells. So as you get new ETFs and new funds coming out with looking for new investors, they're putting the sexy AI theme on it. And that's small caps, unfortunately. Even if some of them have it, a lot of them don't. So I think that's why the small caps are getting left in the dust. So I think I still stay, unfortunately, underweight small caps in 2025. I don't think it's going to be the year of the small cap. And I do think that the theme probably continues. Now, what we should be looking for is probably catch-up AI plays. Obviously, AMD is one of mine. Chad, I'm curious from you guys, what are your catch-up AI themes? Because I don't think AI goes away. I think we're all pretty confident. Maybe we have a cooling period, and that gives us an opportunity to buy some of the better names. But what are some AI names that have just not been forgotten? I mean, or been left in the dust? I mean, obviously, we've had some chips like Micron, Qualcomm, AMD. I own a bunch of those. But there's been a lot of other names too. So can we just, for a second?
I did some digging here, and for some AI stocks. And this morning, and I came up with two. I don't know if they're dogs. I got to do a little bit more research on them. But here's an AI stock, CLBT.
Ooh, this is a
You ever,
small one, Joel. I don't know
yeah,
this name.
yeah. It is. It's an Israeli AI stock, and they seem
Celebrate.
to. Yep, they
And
seem
it's
to
been a
be.
big performer too. Started the year at 7 to 22. But again, a stock's up 200%. So definitely not a catch up laggard trade,
No,
but one that's
no.
been.
Okay, there was another one. I knew you were going to say that about the chart. How about this one? Heiko Corp.
I've traded that
Uh,
for years. How is this an
yeah.
AI play? I don't know that much about the company, to be
Oh,
honest with
that's
you. I
not
trade it.
AI. That's
Oh,
parts for aerospace.
I was going to say, I don't think that's an AI
Yeah,
play.
yeah. And the other one for AI, it's trying to figure out consumer preferences. Zeta Global Holdings. You ever heard of that one? Zeta?
Yeah, it was hot there back earlier in the year, and then it's went to cooling period. So is there a turnaround story here? Here's this one for a turnaround. Again, these aren't momentum plays, though. These are like laggard plays that have, stories have cooled off. I don't know this company well, but I know I was trading it earlier in the year when it was going straight up. I didn't really even know what the company did, to be honest, but it was just moving up. $18 looks like you got some support down 16 to 18, but definitely not a sexy chart.
No, no. Well, that's what you wanted. You wanted AL.
Potential laggard plays. I like them better when they're like curling though, and they haven't had the big run, and then they've pulled back. It's like better that just been, just kind of drifting up higher and looking like they're ready to go. I mean, Astera Labs is one that the chat's talking about. This stock we've talked about on the show too. Been an unbelievable year as well. I think, a cooling period for Astera Labs. All these companies are fantastic companies, by the way. The ones that the chat are coming in here. A lot of these are really good companies, but they've had huge moves. So it's like, are they going to go up another, 200-300% in 2025? Or, we need a cooling period to re-enter these things. That's more the question that I have. I mean, Snowflake's another one too that was dead money for a long time, and obviously had the big gap up on earnings. Starting to leak though, falling into the gap here to a certain extent here. Now, you're looking at a gap down to $33 from 154. So you're kind of in that. Does it fill that gap? Is Snowflake? It's been a laggard. It's been, if you look, it was $400 2022. Now it's 154. I mean, is there the potential that Snowflake turns it around? Yeah, there's potential here. Lots to think about here. It's going to be, again, I don't think this is going to be that random year where you just, pick any random stock, throw 3 letters together and make money. I think it's going to be more challenging than that. I think, the S&P, expect the S&P to be up another 25% next year is expecting a lot. After 2 years of basically up 24, I don't know where we ended up, 24 or something like that. These are big years for the S&P. The S&P typically averages 8 to 10. So you've had a couple of huge years. So I think it gets a little more challenging in 2025. That doesn't mean it's going to be a bad year. Doesn't mean it's going to be a bad trading year. I love, a little bit of volatility. Make volatility great again. That's what I want. Like obviously we got Trump coming in. Well, let's make volatility great again. I think you get some of that. But Jonathan's points with M&A, are very valid as well here. Like I think the new administration is going to be a little more lenient on putting companies together. Maybe biotech start to show, a little bit of life here. Smaller ones, XBI is full of them. Maybe we start seeing Merger Monday again. Remember Merger Monday?
Oh,
We'd always Merger Monday, and there's 3 mergers. We don't see that because none of this administration wouldn't allow anything to get through. So maybe that changes. Maybe that's your driver. Maybe M&A is your driver for 2025. Maybe some of these companies that are actually really depressed do have mergers. Maybe you see a CVS Walgreens merger. I don't think so, but that'd be a merger out of necessity. But lots to chew on, and it's going to be still, think about the administrations coming in. Think about, pro-Trump stocks, anti-Trump stocks. I mean, clean energy still isn't Trump, even though it's been beat up. Think about, rates of TLT finally starts to stabilize, starts to go higher. Lots to talk about here. So 2025 predictions are going to be tough. I'm going to put another acronym together. I would say I did really good in the first half, just reviewing my 2024. I had the NASA, did really, really good in the first half. Second half, not so much. Like Nvidia was unbelievable in my NASA. Then I had AMD, which had a really good first half and a terrible second half. At SMCI, same story. Really good first half. Made my first half. SMCI was up huge in. But then I tried to play it again. I lost a bit on the back end of it. And then the last one was Amgen, and Amgen's slightly down. And that, again, weight loss play, the weight loss drugs has cooled off to a certain extent. So RFK, not anymore on health.
Yeah, we got some stocks. Let's just look at some stocks here. You talking about the The healthcare stocks and everything. Look at the Vardis here, or no, excuse me, not the Vard, Nova Nordisk here.
That
What a fall from grace here.
yes,
What and Lilly too. I mean, can those
yes. The
stocks
weight
regain
loss
some of their
drugs,
luster?
the whole thing cooled when RFK came in. The whole thing, weight loss drugs cooled off. And I mean, I don't think the story is going away. It's cooled off. So that story has the potential to get hot again. So still keep these eyes. But again, rates are not helping. Viking's been a disaster. I've sold most of it at a loss because you're now at a point here where when you got the leaders falling here hard, it's hard to think, okay, well, we got a story. Viking was always speculative, folks. It was always speculative. They're phase 2. I mean, you're a long ways away, and they're obviously going to have to raise more cash and figure a lot of things out. Is there the play that this stock could be an $80 or $100 or $150 stock? Yeah, but the story got a lot tougher. 1, when rates started going down. 2, RFK came in. 3, when the leaders, Lilly and Novo, started falling and rolling over here too. They all started rolling over. So it's tricky, speculative name. This, obviously was a fantastic stock for me for a long time. Made some money on it. Lost some money on this last time through.
The VKTX. We've got a couple coming out of the chat here in the remaining few minutes here, but interesting chart. Cardinal Health, that's hanging in there. Now that's had a pretty good year, up maybe 18-20%. Been in a nice trading range. I tell you, if the bulls continue to defend 115 here, I like it. I like it to the upside. You have you're right here, right now. If you want more on this one, you're at a double top from the last 2 sessions. So you punch through that, maybe get back half of this move. The only word of caution here in the Cardinal Health is, once again, I'm going to the monthlies here. You are having a red candle for the month. And as I look here, when I see like a stock that, do they have one red candle? What do they do the next month? Well, you had one red candle here, you had another red candle. This one, you had one red candle, 2 red candles, 3 red candles before it turned around. This one was only a single one. This one was, another 3-monther here. So once again, keep it closing out, an eye on that, the closing print, not only for the month, is going to be for the year. And those are going to be big levels when you're marking your portfolio. A stock that we haven't talked about much, and someone asked about, Uber. Look at
We've talked
Uber.
about Uber a lot. I've been bearish Uber. It's the
Yeah.
anti-Tesla play. And I've been correct here for a while. Obviously, stock's starting to show some weakness here. Tesla's gain has been Uber's loss. And I know there's some people that believe, well, Tesla and Uber can work together and, if they solve, but I think it's a big if that to think about Elon Musk working with Uber. So I think if Tesla, pulls back, I think Uber, a lot of times, like I just talked with even traders at Bright Trade, and they're like, when you're long Uber, you're just short Tesla. And you know what? There is, to a certain extent, that trade if we just look even at the charts, where I guess not recently because Uber's just been going down anyways, and Tesla's had some recent weakness. But I think Tesla's gain has definitely been Uber's loss. Lyft kind of falls in that same category as well. Lyft falling off substantially here. It's hard to, be a huge, bet. And again, these stocks aren't even cheap. It's not like they're value stocks. These were growth stocks. If we just go and just look at the PE of Uber, I mean, the PE on Uber, let's go grab it. It is 23 times. So it's not crazy. 23 on a forward basis. So it's not expensive. Probably as cheap as Uber has ever been. But, $127 billion market cap. And then Lyft, does Lyft make money? They never seem, it says PE 16. So I don't know if that's, case or not here. I don't, maybe on their last earnings report when extrapolated out or something, but PE the current PE is actually 0 because I think they must have lost money. But forward PE is projecting out to be 16 to 17. I mean, the stocks, I guess, aren't expensive here, but I just don't know. Like I'm a big believer, obviously, in Tesla longer term here, solving FSD. I think when Tesla solves FSD, I think Lyft and Uber have all kinds of problems.
Okay, what else did we see? And I covered the Uber. I call quantum. Just take a look at quantum companies, Dennis, and you know them better than I do. Someone said, "Is it time to take some profits at them?" Just rip off a few symbols here, and we'll wrap up with some quantum stocks to see how they're poised heading.
They've just had such moves here. I mean, giving them again, these stocks can continue, but do they set up for profit taking in 2025? Yeah, QUBT. So give yourself perspective. QUBT in November, QUPT was $1. It was $1. It's $18 now. It was $1. In October, it was $1. In September, it was $1. It was $1 forever. And all of a sudden, story gets hot and the stock blasts off $25. I mean, it's go to 50, 100. We know when this story gets hot, but is this like, one of those penny stocks that have just, gotten overdone? And, eventually there's a huge rug pull? It might be. QBTS, same story. Stock was $1 a month and a half ago. It's $9 now. I mean, if you think you're not chasing here, you are. You're chasing. Chasing sometimes works, but you're chasing. IONQ, our own Christian Fromhertz bringing us this one, was not a penny stock when it started. Maybe one of the better breed ones. $14 to $44 is still a huge move. I think you need a cooling period. So I think maybe January gives you that opportunity and maybe you get back into some of these names. But at this point in time, I'm not chasing on December 31st. One thing I've learned over my 25-year professional trading is I don't buy all the winning stocks on the last day of the year. I'm more apt to sell them. So again, nothing, no crystal ball. Maybe 2025 just continues and there's no January effects here whatsoever. But calendar turns change things. Remember Tesla 2 years ago? And I called this one. Stock was $100. And I'm like, you know what Tesla needs? It needs a calendar turn. It needs a tax loss selling to stop. It needs, and I'm just going out, it was 2022, the end of 2022, and it kissed like the lows, like there at the end of 2022 at $100. And then 2023 happened, and the stock started to turn around on a dime. And then, and obviously, it's had, rough, couple of years just kind of meandering, but we never even got back close to $100. And if you go back and look at my Twitter, I called it for like a week ahead. I'm like, what's Tesla need to turn around? I was like, you know what it needs the most? A calendar turn. It needs to stop the tax loss selling. It needs to get that out of there. So sometimes your biggest laggards can turn around, on a dime on the calendar turn. I'm looking for that again.
Okay. All right, Dennis, here we are. The end of another year of pre-market prep, and we are prepping for 2025 in a big way. We'll be having some announcements coming shortly in the new year.
New products for you guys. We're going to have some
Yeah.
educational stuff, new content, new shows, all kinds of stuff we're working on. Looking like, we're a little ways out from it here, but coming early in 2025. That's what we're working on behind the scenes for you guys. So stick with us here. We got all kinds of cool stuff that we're going to be working on for you guys, giving you more ideas, more, coming together, obviously, as a group here. So stick with us, folks. Me, Joel, and Christian working on some really cool stuff.
All right. And Thursday's guest, I finally got the day right here with these midweek holidays. Jim Tassoni, who's going to be a frequent guest here in 2025, bringing his longer-term insight into the markets, which is going to be a really volatile year. Folks, thanks for joining us, man. You guys have been through the ups and downs in the markets. I know y'all like to tune in when the markets are going down and more volatile because, man, that's what we like. We like to help people. Markets going up, it's a whole different story. It's when you have these pullbacks and these down days, that are a little bit more difficult. So we're going to wrap it up here. We'll be back Thursday morning. Christian will be back too. Pre-market prep, Randy, 2024.